Hello everyone, how are you all? I hope you're doing good and I'm good as always. So, first of all, I just want to tell you sorry that my old recording, like part 1, chapter 1 of unit 1 was very horrible. I just watched that video on YouTube. Actually, I watched that last night and I couldn't, I just didn't want to delete this because I put a kind of lot of efforts. So, I just wanted to get benefited by way of audio, like listening to it, and just uh, release audio of that file on Telegram channel sooner or later. But today we are going to continue our classes. I'll just revise or recall whatever you call it, the concepts we have discussed yesterday, and today I'm going to complete chapter 1 and chapter 2. Chapter 1 or unit 1? I don't remember. Yes, unit 1 and unit 2 of chapter 1. Okay. I'm really sorry for the inconvenience. I know if I was a student, I wouldn't even care to watch. If you're still watching, even if you have watched, I'm really thankful to you. I hope you like, share, and subscribe to this channel so that more people can benefit it, even me. And if you like, it can reach more people. If you share, it can reach more of your friends. And if you subscribe, Uh, it also can reach us more people. I don't know how YouTube algorithm works, okay? And whenever you get any doubt, please comment below. Please subscribe because there are people watching at least 5 or 10. You see, I started this channel so that even if there was one student consistent with me, I wouldn't mind. I would record all YouTube things. I mean, record entire classes for free for that one student. But I just want subscribers so that I get to know how consistent you people are going to be and how consistent I am. It helps in motivate, okay, to get motivated actually. And come on, let's dive into the topic. I'll just revise this, okay. This is I don't know why did I write T by R. T by R. I don't. Let's start from the beginning. We discussed about the question in the very beginning, right? We didn't. Okay. Whatever things I tell you to skip, you can just skip that because in CA Foundation they are not going to ask who is the father of what you call it accounting. What do you mean by Kautilya Abhisas on which they started accounting traditionally? They are not going to ask us. So let's just dive into. You can skip whatever I tell you to skip. Let's just dive into question. An individual invested too long. Let's keep this aside. For running a stationary business. By the way, I brought my calculator. I hope you brought a calculator with you today. On January 1st, he purchased goods of, let's say you can purchases 1.15 lakh. This is cash outflow because you pay for purchases. And it sells for 1.47 cash inflow. I'm just telling you another method, okay? This is not exactly method, this is just common sense. Sales 1.47 lakh. He pays shop rent for the month 5,000. Rent is a cash outflow. You pay rent, you do not receive rent. I mean, if you are a tenant, you pay rent. Okay. There are still goods that are worth of 15,000 in hand. As I told you, goods that are yet to be sold cannot like this is not exactly cash inflow. But potential profit, okay, closing stock. Let's just this might be misleading. Let's just say trade balance, debit balance. Closing stock is 15,000 in, okay. Just to sum them up, and they asked about the result of this output. So 1,47,000 plus 15,000 equal to 1,62,000 minus 1,15,000 minus 5,000. The total is 42,000. This is your answer. And they are not going to ask these kinds of questions, okay? If they ask these kinds of questions, just visit in the example and dance. Skip this. Skip this. The takeaway is language of business is accounting. And then this is important. Definition of accounting. Accounting is an art of recording. What do you record? A journal entry. Classifying. What do you classify? Lecture entry. Summarizing. What do you summarize? How do you summarize? In trial balance. Okay. So in trial balance. Accounting is an art of recording, classifying, summarizing. RCS. Okay. In as and then the next question. This is the first part of the definition. This is the second part of definition. And this is the third part of definition. Okay. In the first part, this is just that accounting is the art of recording, classifying, and summarizing. How? How do you record? How do you classify and how do you summarize? In a significant manner. What is significant manner? A significant manner means important way. Like material, considerate, more prioritize, etc. And in terms of money, accounting is obviously in terms of money. Then how? The question of how has been answered. And then the what. What do you record? What do you classify? And what do you summarize? What do you summarize? We summarize events or transactions. Okay, let's get to events or transactions. What do you mean by events or transactions? Events or transactions are the business performance of a month and agreement. What do you mean? Business performance of a month or agreement. This is again this is event. What is event? Event is a consequence of transaction. Consequence of transaction is an event. Just if you prefer, you can listen to the audio, or I will share with you on the LinkedIn. I've explained this detail. Okay, skip this. Procedural aspects of accounting. This is not much important, but you can, if you read, you get overview of the accounting process. What is a procedural aspect? How do you do accounting? There are two things: generating financial information, using financial information. Okay, for generating financial information, there are Sai Ramcharan square, means C square. What is this? Summarizing. What is A analyzing? What is I interpreting? What is R recording? What is C classifying? What is control? Is it control exactly? No, communicating. You just read the highlighted part. Okay, take screenshot and take highlighter. Highlighter and highlighter. Skip this. No, Okay, you can skip this. Skip this. Or just read once. Skip. Skip. Objectives of accounting. Oh, O means objectives of accounting. Past P A square S T. These are the objectives of accounting. What is P? Providing information to the users of for rational decision making. Providing users, providing information to the users for rational decision making. Rational means better, mature, etc. What is A? A means ascertainment of what? Results of transactions, recorded transaction. What transactions do you record? Systematic record of transactions. Okay. Another A, ascertainment of financial position of business. So we have got 1, 2, 3, 4. And then T. What is T? Oh, sorry. This S is for solvency of the business and T is a systematic record of transactions. T for transaction, S for solvency, short-term solvency and long-term insolvency, profitability. A for ascertainment of results of recorded transactions, ascertainment of financial portion of the business. P. What is P? Providing information to the users. Who are the users? Stakeholders. What are stakeholders? You get that part later. These are the small part of objectives. Just read this before the exam. You don't have to write word by word in the examination fair. What are the functions of accounting? Accounting functions means C, D, there is no E, F, G, M. M means measurement. F means forecasting. What do you measure? Past financial performance. Past financial performance and the current financial position. What do you forecast? Forecast means project or guess or etc. Forecasting future performance and future financial position. This is past, this is future. Decision making. Relevant information to the users of accounts for decision making, comparison and evaluation. Uh, Accounting assesses performance achieved in relation to targets and disclose information regarding accounting policies. We will talk about this later. We contain liabilities. We will talk about this later. It is an important role in predicting, comparing, evaluating financial results. Just go through this and just highlight it. Just write the highlighted part in the exam. Okay. What do you mean by control? We have not discussed about the control, but I will just tell you basic of control yesterday. Okay, let's keep this moving. Government regulation and taxation. Accounting provides information to the government. Accounting provides information to the government, obviously. To exercise control of the entity and to impose taxes. Impose means kind of make them liable. So what is control? Accounting also identifies means recognizes weaknesses of operational system and just decode this. Accounting says weakness of operational system. What is weakness? Weakness is obviously, if there is something deficiency. Okay. What is operational system? Operational system is for every business there is an organizational culture. You all will get to know about this in CA intermediate. And then there is internal controls. What is internal control? Internal control means controls that are imposed, and this is dependent upon organization to organization, so that the business operates effectively. So that business operates, the business what they get to do business smoothly. They put some controls, they impose some controls. For example, in your 10th class, if there are some co-ed schools which say code of conduct, this is exactly code of conduct of business models. Bookkeeping, skip, skip, or read once you if you want. Objectives of book. There, objective means oh, accounting objective means oh, past. Bookkeeping objective means oh, CA. It's complete recording of transactions. Complete recording of transactions. Okay, and ascertainment of financial effect on the business. Financial effect of business ascertainment. It is concerned with the combined effect of all transactions made during the year. Accounting period means year upon the financial position of the business as a whole. What is the effect of transactions on balance sheet? This is what they are saying. Ascertainment of financial effect on business. What is the effect of transactions on balance sheet? Okay, financial position of business as a whole. Accounting and bookkeeping distinction. Get this. We talked about bookkeeping. Recording, recording, wait. Recording, summarizing is bookkeeping, right? So let's say, sorry, not summarizing, as well. Keep this in mind. I'm sorry, okay? It is a process of first bookkeeping. Bookkeeping is a process of recording of transaction. That is the judge's ability to the process bookkeeping is about recording of transactions. Okay. And accounting is about summarizing of the recorded transactions. This is This is concerning recording of transaction, summarizing of recorded transactions. Okay, it constitutes as a base for accounting. For every accounts, bookkeeping is the way out of which they summarize, analyze, interpret accounts. Language of the business is accounting. Do not form part of process. They are prepared in this process on the basis of bookkeeping. Okay. I mean, financial statements, okay. Here, financial statements are there. Here, financial statements are there. Decisions. Decisions here cannot be made. Here, decisions can be made. There is no subfield. Here, there is subfield. What do you mean by subfield? You talk about this later. Subfield means here. Accounting, managerial accounting, financial accounting, etc. Financial question cannot be accepted. Financial question means balance sheet can be accepted. I think since this is having some kind of issue, I think I have to prepare and make notes and then do the recording, I guess, instead of solving problems in class. And let's just see how it goes. Before entering into the big chapters, we have like many small chapters, and let's see how things work. If it is still lagging, I do not have any other option. I'm sorry. Because this is around the seventh or eighth trial version in this entire in the past three videos. Just read this. You should know the names, titles of the financial accounting, subfields of accounting. You should know the titles of subfields of accounting, financial accounting. It covers preparation and presentation of, interpretation of financial statements and communication to the users. Management accounting, cost accounting, you get into social responsibility accounting, HR accounting. These are the five things. Just remember the name and write relevant concept. Just read once. Okay. There is nothing much to explain. And then the new topic, users of whatever we discussed till now is that of yesterday's. 1.9. There are 1.12. Even in that, you have to read something, and I can get to skip some topics because there are just self-explanatory. And if you have any doubt, you just comment below. Who are the users of financial information? Stakeholders. Stakeholders are users of financial information. These are all the important topics. Okay, anything can come in the exam in any attempt. Who uses financial information? There are two people: internal users, external users. Management accounting is concerned with identifying information requirements as well as methods of providing information to management, while information requirements of outsiders are generally served by financial statements. They say financial statements are used by outsiders. Management accounting is concerned with insiders. Okay. They like what is turnover ratio. Mhm. Employee turnover ratio. What is employee turnover ratio? The ratio, the ratio on which employees are, what is it? Vacancy are getting out, or I don't know, shifting from this job. I don't know, sorry. So there are investors, first of all. Investors are outsiders. They provide risk capital to the business. Investors invest cash, which is capital to the business. They provide investors provide capital. Okay, just read all these. Okay, you cannot write all these in the exam. You read, and whatever point you feel like writing in exam, just remember that or highlight that. And do not write examples, or do not highlight example and write just example, and write some relevant topic and then write example if you want to write example. Or if they ask employees, growth of the employees is directly related to the growth of the organization. Therefore, they are interested to know the stability, continuity, and growth of the enterprise. Here, lenders, outsiders, insiders, outsiders. If you want, you can write this is this point. These people are the outsiders of organization. Lenders. They are interested to know whether their loan principal interest will be paid. Suppliers, outsiders. Suppliers means the people who supply goods to you, so that you can uh, sell to your customers. They are interested in knowing the ability of enterprise to pay their dues. That helps them to decide credit policy, etc. Customers, outsiders. Obviously, customers, they are also considered stability and profitability of the enterprise because their functioning is more or less dependent on the supply of goods. This is kind of example, you can skip this. Government and their agencies, outsiders, public outsiders, management insider. They regulate the functioning of business enterprises for public good. Government generally regulate for willingness or for the good for public. In general, we are not talking specific governments. Okay, what government is supposed to do is what we are discussing right now. Not how what government is doing. Not blaming any because I don't really care about the government actually. Allocate scarce resources and among competing enterprises, controlling prices like petrol, charge excess uses like petrol, taxes like petrol. No, for petrol, GST is not applicable till as of now. So they regulate, government regulate prices for the well-being of public. Public is interested in functioning of the enterprise because it may make substantial contribution to the local economy in many ways, like in Hyderabad. Like at Hyderabad, many IT companies have come. It made local well-being better, local per capita of the state better. That is how significant IT in Hyderabad is. And then the management. Management as a whole is also interested in accounts for various managerial decisions. On the basis of accounts, management determines, am I just reading or are you with me and trying to understand? Just please comment below. If you want, I will explain. But these are just self-explanatory, which is why I'm not explaining. Also, I'm skipping whole new topic. Whole topic. You're gonna kill me. Management is as a whole. It is said, management is also interested in accounts for various decisions. Okay. On the basis of accounts, management determines the effects of various decisions on the functioning of the organization. In order to, I mean, these are self-explanatory. Just comment me below if you have any doubt or if you feel like I skipped some important concept. This is what I'm talking about. Read by yourselves. Then what's the point of YouTube? Maybe one day, for example, for chapter 9, accounting for incomplete records, I tell you by, oh my God, this is so easy to just solve by yourself. What's the point of me? Right? That's the point. I just, it's just fun to skip to make you read something. This is just like, relationship with other disciplines means other subjects, accounting and economics. Like they say what is economics and how people make decisions by economics and how accounting is done and how accounting and economics is overlapped. Overlapping means integrated. Just read once. These examples you can skip. And we are going to be the ending of this chapter. In economics and statistics, mathematics, law, math. You should know that getting so that you can write some crap, all sort of crap. Like, for example, in economics, we say there are two kinds of economics, macro and microeconomics. And accounting is concerned with microeconomics. Oh no, accounting is concerned with also macroeconomics. It's right away. Like economy, like you measure national income, etc., with integration of accounts. I don't know. I haven't even read that yet. I just am saying what is part of me. If you have any doubt, you can just comment me. I keep on telling you to comment me. Please, please, please comment me below. Actually, these are your CPT subjects, right? Economics is CPT subjects, statistics, mathematics, law, and the management. Just remember this. Limitations of accounting. This is important. Why? Because I feel so. There are certain misconceptions regarding financial statement. Sorry. A common man presumes that income statement shows correct income or loss of the enterprise, and the balance sheet predicts perfectly true and fair view of financial standing of the enterprise. What they are saying is people generally think financial statements provide factual, super awesome, correct information. Do you think it does provide? Do you think so? Comment me below. Actually, how can you comment? We are even talking about the limitations, so which is contradictory. It must be regular. I will tell you something. There are many management estimates change in accounting policies. There are many subjective. Subjective means it depends on people. There are many subjective decisions that are being made by the management in preparing and presenting financial statements. Okay, that is one of the biggest liability, biggest what do you call it? Threat for a chartered accountant. Because when you audit, okay, we'll talk about auditing later. It's fun. Let's stick to this subject. Recognize the language of in its own limitation. The figures of profit or loss generated by accounting process are subject to various constraints within the accounting work. Blah 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 blah. These accounting assumptions, conventions, which accounting results become limitations of account. I think this is where we can discuss so that I explain so the balance sheet cannot reflect the balance sheet cannot reflect. Oh sorry. Let's see if I can petrol draft. The balance sheet cannot reflect the value of certain factors like loyalty, skill of person, which may be the most valuable asset of an enterprise. For example, there is an employee who sticks around the company for a period of 25, 30 years. Balance sheet do not reflect the value of such employee. Of course, balance sheet it reflects through profit, but a layman like me cannot see the balance sheet and say, oh, there should be some 20-year good who must be working his ass off so that company is earning profits. No, the balance sheet cannot reflect the value of certain factors like loyalty, skill of person, which can be most valuable. And if they just repeat the same line, let's see the ICA material. Accounting ignores changes in some money factors like inflation. Accounting ignores inflation. Financial management does not ignore that. There are occasions which accounting principles conflict with each other. You get to know about this in CA internet. Accounting principles contradict with each other. Certain accounting estimates depend on the sheer personal judgment. This is what I was talking about. Accounting estimates depend on personal judgment of management or accounting. Management, it can be management. Okay. Financial statements consider these assets, those assets which can be expressed in monetary terms. Only assets that are expressed in monetary terms can should be and will be shown in the financial statement. There could be some assets which cannot be which provides value to the specific company, but not shown in the balance. Different accounting policies for treatment of same item adds to the probability calculations. What are accounting policies? We'll talk about this later. Keep this in mind, there are different accounting policies. Let's read this here. The factors which may be relevant in assessing the worth of business don't find place in accounts as they cannot be measured in terms of money. If you want to know the worth of business, accounting is not your place. It is financial management. The balance sheet cannot reflect the value of certain factors like loyalty, customer, perceived love. Balance sheet shows position of the business on a day on its preparation and not a future date, which users of accounts are interested in knowing. Balance sheet talks about your past information, not your future information. Isn't that right? If you enter into any transaction, that will be recorded in the balance sheet. Not that if you think of entering into the transaction, it won't be recorded because it is not substantial. It does not make sense. Which is limitation, they say, because investors expect what could be the profit in the for the next year, what could be the position of assets and liabilities in the next year. Accounting ignores changes in monetary terms, like money factors like inflation. There are occasions where compete with each other. Accounting differential presentation of accounting. Different accounting policies are written as manipulations. Financial statements consider those assets which can be expressed in monetary terms. Role of chartered accountant in society. This is the last topic. You should read this by yourself because this is general. Just imagine, close your eyes and think of yourself as CA. Read this as a CA, okay? Because these are the jobs. If you start uh, practicing, these are the role you. These are the things you can practice. You can do in work. You can work on this. You basically, we are going to get expertise in these fields. Maintenance of books of accounts. We talked about this. Statutory audit. You don't know anything, but basically, audit means checking of books of accounts. For example, there is a company, and I am a chartered accountant. Okay, not yet, hopefully so. And those company people come to me and ask me to audit. What I ask them, what is audit? They tell me auditing is evaluation of their books of accounts, checking their books of accounts. Why should I check? Because I am the expert. Chartered accountant is also an auditor. There are two kinds of audit: statutory audit and internal audit. For statutory audit, how can you put this in words? I am the independent third party. Okay, I am nowhere related to the company, and I audit the books of accounts of the company as a stranger, as an independent, and I tell the people this company whether this company is good. Internal audit is an audit. Internal audit is an audit which I told you independence is the important for statutory audit. In here, independence is not mandatory. You can be independent, you cannot be independent. You can be third party, you can also be an employee of the company to check the internal affairs of the company. Internal audit provide details to the statutory auditor, while statutory auditor audits taxation, you file income tax, GST, EPSC, UPSC, ESIC, etc. etc. Just read this and keep this in mind. Management, accounting, and consultancy service. MAC. This is advisory function, largely responsible for internal reporting of management for planning and control for operations. For also for formulating long-term plans. Financial advice. Just read this. What do you mean by financial advice? Advice whether you invest in certain thing or not, whether you invest in certain shares, whether you purchase certain dividends, or whether you purchase assets, certain assets. Like for example, there is a car. After few years, financially we check whether the value of car is better, and whether we replace this or continue this, or what do you call repair this, repair, replace, or continue. So these are the financial advisors. Investments, insurance, content can provide information to clients on various insurance policies, such insurance, what it was. business expansion. This is big. Investigations. Just read this. Mhm. Pension schemes. Other services like secretary level. What is secretary level? Companies, clubs, associations, indeed. Virtually all organizations involve secretarial work. Accountants frequently do this one, like more like service, like what do you say, accounting services, legal services towards the in the companies, like corporate law, share registration work, company formation, receiverships, liquidations, etc. Arbitrations. Arbitration is accountants are invited by parties to as arbiters or make disputes a settlement of dispute as regards of cost accountants. Information services, IT. Just to keep this technologies in mind so that it be easy for you in for CA form, CA interview. Chartered accountant in industry. Industry means job. Read this. Chartered accountants in public sector enterprises, government jobs. Read this. Fiscal policies in the government. Read this. Just to read this. This is not much important, but you should know. Oh my God. Read this. Don't you think I think we have completed our, what do you say, thing. For safety purpose, let's stop the video here so that I don't know when this is stuttering. And after I record, we talk about, we discuss, no, not summary, sorry. MCQs, draw fast, MCQs, draw fast, and then we go to the next chapter. Okay. Again, I'm telling you, thank you so much for watching this till here, and I really hope you share, subscribe, and like this video so that it motivates me and that provide very fruitful information for you. Also, if these classes are boring for you, it's fine. It's totally fine because theory is always boring. And even while teaching, it is boring for me too. I'm just very curious to jump to depreciation, inventories, etc. Because you're gonna love this. You're gonna love the pictorial representation, like diagrammatic representation of the problematic practical problems. So that's it, I guess. Take care. Bye.